The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when lone fishermen in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the February 15th fantastic Friday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life, because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool I call Leave No Stone Unturned. Leave no stone unturned, folks. It suggests that going to great lengths and efforts to achieve a worthwhile goal, and the virtue needed is to do that is what I call diligence. You know, Miguel de Cervantes, he once said that diligence is the mother of good fortune. I absolutely believe that. I hope you do as well. And there's great examples that surround us, whether they're explorers or inventors or scientists or artists. They're all over the place. Noah Webster, he spent 25 years compiling the first dictionary of the English language. How about Robert E. Peary? He tried for 23 years to reach the North Pole before finally succeeding in the early 1900s. Irving Berlin got 23 cents for his first song. All of them, folks, they knew that they were going to leave no stone unturned in order to achieve their outcome out there. The time is now. The time is now to expand yourself. Opportunities, folks, they surround each of us. Leave no stone unturned. Expand yourself by doing more, giving more, and expand your thinking. You know, Mother Teresa, she once said, to keep a lamp burning, we have to keep putting oil in it. Next Wednesday, folks, February 20th, from 6:30 to 7:30 p.m. is an opportunity for me to put oil into your lamp by doing more, by giving more, and expanding your thinking. I'll be sharing with you a strategy that provides and produces extraordinary results in my online workshop, Reading the Message of the Markets. If you haven't had a chance to go sign up for it, you want to do it now. Leave no stone unturned, folks, because this is going to be some of my finest work in one single hour. This is going to be an hour of power, folks. So getting into the workshop, it's easy. Just sign up for the trial period of Mastering Probability. That's my newsletter service. You can see all the details either under newsletters, the newsletters tab on the TFNN page, or click on my name or the Trader's Edge Show on the homepage of TFNN.com, and it'll take you to all of the details out there. Look, the service comes with an unconditional money-back guarantee. That means if the deposit for signing up for this 1 hour workshop is a problem, then sign up Wednesday morning and cancel Wednesday night. It won't even impact your credit card statement in essence. Do what you must, folks. Do whatever you must, but leave no stone unturned out there. Folks, in all of the things I've ever taught, this is going to be the one that you want to be able to master out there. So that's what we're going to do next Wednesday, February 20th, from 6:30 to 7:30 p.m. Leaving no stone unturned. Looks like the markets are ignoring what's going on with the king and really what's going on inside the metals market. That's where we're going to start instead of starting in the futures market, because the futures are flat out there. You got the Dow futures are off like about 9 points. The ES Mini's down 50 cents. The NASDAQ futures up $1.50. The Russell's up a point. King dollar is only up 4 ticks, but it's gold and silver. Goldilocks and hi-ho silver are the gold has broken through the hammer candle. So let's start there. We're going to put up that chart if you are listening on the radio or your mobile device because you used tfnn.mobi. Thanks so much for doing that. Remember, you can always catch the live stream of this show by going to the homepage of tfnn.com. Over on the right-hand side, you'll see those 3 little smart smart tablet devices. Click on that. You'll be able to see this show streaming live, and again, the archive on Channel 9. It's all about the hammers today, and the hammer is the sledgehammer is out. We're taking a look at the January 4th hammer candle on gold. That low, 1626. Gold now trading at 1614 out there. Volume-wise, we can also see, gold is getting into that oversold territory, but the bears are in control. In fact, we'll switch over. I'll switch back and forth in between a couple of charts out here. I'm going to switch over to the other gold chart here. It says gold headed to 1584. When you are long and you break a hammer, certainly if you close below a hammer, you're just simply wrong on the trade. That is a very strong place where you have the bulls hanging out. It's all a matter of being able to identify where the bulls and the bears are. That's all you want to do that's not all you want to do, but it's one of the things that you want to make sure that you can do when you're taking a look at a stock chart. You want to make total use of these candlesticks that are out there because they are so empowering. There is so much information. Now what we're taking a look at when I say gold going to 1584, that's nothing more than the next level in the elevator, in this case here on the way down. That's the next level. If the bulls don't show up there, they don't show up and they defend that 0.786 retracement. If they don't defend the smaller 1.618 butterfly pattern out there, then gold will head back to that 1526 level, and it will do it probably in a hurry. That is the last area of support, or when I say last area, the most recent area of support, long-term support, taking us back. In fact, if I have to really pull up the chart here, really coming back into the period of September 26, 2011, that's at 1535 level. It's been tested 2 other times, but if 1584 fails, we will see gold in that 1526, 1535 level post-haste. Volume-wise so far this morning and picking up 117,000 contracts. That's passing that hammer candle, which had 143,000 contracts, but that really doesn't matter. It's just volume-wise, just simply closing below that hammer says you're going down to the next level out there. That is on gold getting hammered. Now let's go in and take a look at silver. If we look at silver, silver is trading down, and gold is trading down 21.40 out at that 16.14 level. Silver off about 1 3/10% as well, off 37 cents. Right now trading out at 29.98. Now silver this is a close to a hammer candle. Same date, January 4th out there. Needed just a little bit higher close in order to have that hammer form, but you still can see that is where the bulls came in and supported silver. So silver still up above the wick. And the low of that trading session on January 4th is $29.24 out there. However, volume on that trading session, 41,000 contracts. Silver already this morning at 34,000 contracts. So silver is going to go down and test the hammer. It may be that what we see here is silver, because it's acted stronger than gold up to this point in time, that silver will get down, test that low of 29.24. If you see a reversal there, I suspect that we'll see gold making that that shorter-term butterfly, that 1.618 pattern that is out there. However, even if you got this gold down to 1584, even because you have a pattern sitting up there, that's not a reason to go ahead and take a long position here. You want to wait for the bulls to show up, and they can't disguise themselves. They just absolutely cannot disguise themselves. They will show up, and they'll show up in some candle formation out there. And a reversal candle is what it is that you want to see before you go take a long position. If we go take a look at the light sweet crude, we've got light sweet crude this morning. That is also trading down. That's trading down about $1.43 right now. That's down 1.5%. So you got light sweet crude quickly actually in the lead in the commodity sector on the way down. 95.76. I suspect that the light sweet crude here has made a top, and that sends light sweet crude down to $92.82 first. So we'll call that 93, and then down to $89. $89, folks. That is the 0.618 retracement of an A to B equals CD down, and oil has much further to run, I should say. Not longer, but much further to run before it moves towards its sold condition out there. So oil's got further to run. You want to talk about reversals? Well, the reversal was in the bond market. Yesterday, if we take a look at that 30-year Treasury, you want to talk about reversal signals. There it is. Now, this is the beauty. Here's what you want to take a look at if you're looking at some type of pattern that you trade. Now, in this case here, this is the 0.618 Gartley buy pattern with beautiful Fibonacci numbers out there. What do I mean by beautiful Fibonacci? You got a 1.272 expansion of that B to C point. That's what formed the D coming into that D level, coming into that bullish engulfing candle on February 4th out there as it made a low of 142.05. Now, that session was a bullish engulfing. What did we get to yesterday? Yesterday, you had a key reversal session, a key reversal and a bullish engulfing. So, assuming that you see bonds here close higher, close above, as long as bonds today close above the 143.1 level, you'll maintain that bullish engulfing pattern that's out there. And what bonds will first do is they'll make a run for this declining tops line out here. You can see this morning trying to get up into that area. I suspect that's what we'll see it first do. If it breaks above that, then bonds will be off to the races, and the races will take it to the stop of January 2nd's high. That is a tested area of resistance out there. That would be in the 146 range, and I suspect that is where bonds want to head to at least. Why do I say at least? Well, a normal Gartley pattern, whether it's buy or sell, when it works out, if you just simply go from the A point to the D point, we're going to go ahead and do that right now. We'll put that up on the screen. You can see the 146.16 level. That's the resistance level. That is also the 0.382 area. You get a close above that, obviously it'll be inside that gap from December 31st, 149.04. That's the 0.618. That is a normal move on any type of Gartley buy or sell. In this case here, it would be a Gartley buy pattern out there. That is it on the commodities. Well, we can go take a look at platinum out here. Let's go ahead and put that on the screen. Give me a second here to go ahead and pull up that ticker symbol. Platinum is down about $33 right now. Give me a moment to pull this up here. And that is the strongest of all of the metals, although moving down with some volume here. But if we do take a look at platinum, since this is the morning of hammers, let's go take a look at the hammer candle inside platinum, because this one's a beauty. The hammer candle formed in platinum out here. In fact, let me just do this here for a second. Yeah, that's it. You know, one of the things I'm going to be teaching is pretty interesting out here. One of the tools, the tool that I'm going to be teaching you how to use on this coming Wednesday, as platinum was making this hammer. Not that that's not good enough, but it's not good enough because you like to have multiple confirming patterns that are out there or technical indicators. But as the December 29th low in platinum was being made, which was out at the 1347 level, you had a nice little hammer candle out there. You also had something else that was a trigger to go ahead and take a long position. We can see that that is an area that also began. I'm just going to draw a line across the bottom of the screen here. You'll be able to, I'm going to use the top of the hammer out here. We'll go ahead and put that in black. You can see how that's where the bulls were absolutely hanging out. It's why you want to understand candlestick patterns, because as the market moved down back in the May time frame, back in the July time frame, that held as a support area. Not so true today in the case of gold, off $21. 877-927-6648. Futures are flat. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Future's still flat. You know, we were talking about platinum before we went to break. So if we do take a look at platinum, we looked at the bottom of the support area, and we can see that platinum really been consolidating in quite a range out here. The low of the range in the 1380-ish type range. Let's see here. You've got, I would say, 1387 or so. The top of the range really being right up here. Its most recent highs right around the 1735 area. And platinum is stronger than gold or silver. And if you take a look at the smaller consolidation, it's really right down here. This is the red line, horizontal line going across my screen, right in about the 1531 level. So if you like to play the metals markets, you know, watch for the reversal signal in gold and silver as they move down to their areas, and I would also keep platinum up on my screen, and you will find the bullish reversal signals. If we do take a look at this most recent, this smaller consolidation area, you got this nice bullish engulfing back here on August 31st. That helped to really first set up this little smaller consolidation range. You got a bullish candle as that level was being tested. That candle occurring on October the 30th. You then got it as that level was being tested on December 31st out there. So right now you've got platinum at the top of its range. Looks like it wants to pull back into about the 1533 level. Across the pond right now you've got the DAX is up 10 points. The FTSE's up 16. Hang Seng was up 31 last night, 14 points on the Shanghai. That's if it was open. I'm not sure with the Chinese New Year holiday if it was open or not. But I do know the Nikkei was open, and the Nikkei's got that beautiful 1.618 butterfly pattern here. The Nikkei trying to pull back at least to the first area of about 10,253 out there. Let's go to Sam in Philly. Sam, thanks for calling. Thanks for holding. How are you this morning?
Good. Good morning, Steve. How are you?
Excellent. Thanks for asking. You wanted to take a look at SIRI. SIRI is the ticker symbol. Tell us what you're doing and how we can help you.
Yeah, I'm thinking about buying it at 228.
Okay, 228.
Yeah.
Yep. Okay, great. So you're not in the equity right now. I've got the weekly chart up on SIRI, folks, and SIRI has a confirmed A to B equals CD up. Now this is a stock here that back in 2009 was selling for 5 cents. That was a low. February 13, 2009. It's had a pretty nice run since then. Trading right now, or closed out yesterday at $3.17. The B point on this, the B point that I would use, would be the high of the trading session on June 3rd, the week of June 3rd, 2011, did 591 million shares. The B point was crossed with wide price spread and volume out there, Sam. That was done on the week of August 10th, 2012, 843 million. We can also see that price on the weekly chart here traveling on the inside of the C to D leg. 366 is its first target out there, which also on the weekly chart will take you back to about its most recent swing point highs, which would take you into the December 2007 level. But this may have $4.30 on the weekly chart written over it. First is 366. So now let's back down to the daily chart. And you've picked out a price of about you were saying two what now?
228, which is the daily July 8th, 2012.
Daily July 8th, 2012. So you're going all the way back to, you got July 8th out here. Let me come all the way back to July 8th. Now, July 8th, August 8th or July? August,
sorry,
I think.
It's August.
Okay, good. So what Sam is looking at, folks, he's looking at the last time that this had any real significant volume where it broke out. That was on August 8th, 325 million shares that day. I don't know that would be a nice entry point on it. I don't know that it's going to go ahead and pull back. When do they have earnings released? Do you know, Sam? Or have they already?
No, I don't know that. I'm sorry.
Okay. So it makes two of us out here. I don't know that would be a nice entry point. So, are you looking at this as a longer-term position? Is that what you're thinking, or?
If I buy it at 228, it's a long-term, but what do you think about short-term? Because the stock is looking great. I don't think it's going to pull that much. If it does longer-term, I'll buy it and hold it. But for now, to trade it, what is a good price? Maybe $3? I'm looking at.
Well, you picked out the great price. That's I was hoping that you were in it. I was hoping you were in it from the early stage when I saw it was down at a nickel.
I wish so, yeah.
It's a tough call. I would say, the problem here is, on my screen here, I've got the 200-day EMA. It hasn't been back there since July of 2012. I don't suspect that it's going to come back and test that area. The next area with volume out here that you could be taking a look at would probably be the October 10th, so 1010. That did August 8th, so it did 8/8 and 10/10. I don't know when the next 2 days and months come together, but maybe that 276 level on August 10th, that might be a good spot to go ahead and give it a shot.
Perfect.
All righty. Hey, Sam, thanks so much for calling. Have a great weekend and enjoy. I don't know if you have Monday off, but if you do, enjoy that as well. We'll be right back, folks. 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 10 points, composite up 3, S&P's up 1, Russell 2000 up $2.70. Google up $1.45. Apple up $1.41. Microsoft up 8 cents. Intel up 5. Lead the charge to the upside. Herbalife, what a battle they've got going on there between two titans. Up $6 right now, up 16%. Qlik Technologies, QLIK, up 17% this morning. VF Corp, VFC is the ticker symbol, up $4 and change, up 2.5%. Smucker's Jelly, they're spreading it on. SJM is a ticker symbol, up about 2.5%, up $2.36. Ellie Mae Clampett, ELLI, the mortgage company, up 9%, up $1.92. To the downside, IPG Photonics off 11%. Logmain Inc., LOGM off 24%. Truly getting hammered. Public Storage off about $2 here. Amazon about 2. Transocean RIG, RIG, the ticker symbol, they're off about 2 as well. Walmart down $1.56. Agnico Eagle, AEM, off $1.29. Our call-in number, 877-927-6648. Let's go back to Sam's question here and take a look at, we're taking a look at Siri was the symbol, because during the break, what I quickly noticed, I had a number of things were on my chart kind of disguising stuff. And so the question, which was a great question, hey, where do I take a look at possibly getting in? Because what Sam was doing, and rightfully so, was going back to the high volume bar from August 8th out there. That would be an area where this equity at some point in time should come back and pull back and test that level. That is, unless there's some other high volume that moves in here. So I was asking the question, when are earnings coming out on that? Because that would be the time. We've seen a number of stocks here just simply get picked off from highs out here, and this has certainly had a pretty nice run out there. But let's take a look at another possible area, assuming that isn't the case. And and taking a look at reading the message of the markets, take a look at the bulls and the bears in this equity. Right now, you've got the bears really trying to take control in this $3.25 range. You've got this little bearish engulfing that was created right here on February the 4th out there. You got a little dark cloud cover on the session 2 days later. That was on February 6th out there. You got another bearish engulfing right down here on February the 8th. Got this little doji candle that took place as it moved up into the resistance area of that prior bearish engulfing candle. You got a little doji running into resistance. That means a whole lot. You then had the leaves falling off of the tree yesterday as it created a little shooting stars candle. So you can see here, right in here, you've got the bulls and the bears truly fighting it out. And a great target area would be taking a look at this open gap. Much like as we take a look at our markets, the ETFs, the indexes, that December 31st, January 2nd level. So, Sam, I would say an area would be the most recent high volume bar on any type of pullback would take it to the October 18th level, and that's 297 to 282. Well, if you take a look at that January 2nd gap, the low of it is 295. So that 295, 292, 287, in fact, the filling of the gap would be nice from December 31st. That is the most recent swing point out there. If this comes back into that area, on less than 47, I'm sorry, excuse me there, on less than 84 million shares, that to me looks like the place where you would go ahead and target and take a trade. And ideally, you'd have the RSI down below the 50% line there. And that's what I would, at least that's what I would be looking at in taking a closer look at that stock chart. Had a few requests to take a look at, this is Request Friday, folks. So I had a couple of requests here to take a look at some stocks that have fallen out of bed. And one of those stocks here is CTL. Century Link, I believe, is the name. They absolutely fell out of bed yesterday, and this was with volume. And so the question is, somebody was bottom feeding here. Do not go after this equity. Take a look at the volume coming out of this. 70 million shares out there. That 70 million shares, even though it did not break the swing points, it never really got down to the October 4th, 2011 lows out there. That only had 6 million shares. That low is $31.16. I suspect that is at least where this baby wants to go. Let's put this on a weekly chart out here, see what we've got weekly volume. No real bullish candles down here, except for this one right here on October 14th. We're looking at the weekly chart, but it is already trading into the candle session, the weekly candle session of October 7th, and that only has 33 million shares there. So, yesterday's move was huge, and this is setting up an A to B equals CD down on the weekly chart. If we go draw that candle formation, we come off of the highs from December 24th, 2010, all the way down to that swing point that it's trading into on October 7th, and back up into the October 10th area. 1-to-1 says 27.70 is written all over this thing, but perhaps more likely $23.41 as this makes its way back to the 2008 levels. That is on the Century Link out there. At least that is what the stock charts are showing us today. On the request line as well, we had a request to take a look at ANN. Now, this is a better setup here. ANN is the ticker symbol that is for Ann Inc. And what is Ann Inc.? Let's go see what Ann Inc. Ann Inc., together with its subsidiaries, it's Ann's retail stores out there. I forget the name of it, but I guess it's just called Ann's. But it's not just called Ann's, I know. Oh, they also own Ann Taylor. There you go. Ann Taylor and the Loft brand. So now here's an equity. Let me just refresh my screen, make sure that I've got all of the data out here. And that looks like I do. So now we're taking a look at an equity that is pulled back to a breakout area. And the breakout area that we're looking at, folks, is the gap up. So this had wide price spread, accelerated volume. Here's a good example of gaps getting filled, right? So I'm going to go ahead and take some of the lines off of this chart, make it a little bit easier for us to take a look at. Let's get rid of these moving averages here. I'm going to go ahead and get rid of I'm just going to move this down here to the bottom. So we're taking a look at Ann Taylor. Now, no bullish candle just yet, and that's going to be the thing that you're going to want to wait for if you're going to go ahead and take a position in this. But this has come back to the breakout area. So let's take a look at volume. Number one first, the benchmark is going to be the actual gap up on August 17th, 9.3 million shares. As it's coming in, and filling that gap, which it did here. It looks like the first time was on February 13th, so a couple trading sessions ago, 1.6 million shares. Now, what you ideally like to see, the ideal trade setup is an equity pulling back into the session where it broke out from, the low volume, which happened to be that August 16th level, August 16th, 2012. 955,000 shares. In fact, let's just draw the line across the bottom of the screen here. Might make it a little bit easier. We'll just go ahead and keep this one on our screens, and we'll take a look at it over the course of the next week or so, see if the bulls show up in this equity. But you can see the 900,000 shares from 955 to be exact on August 16th. As this equity traded yesterday, 1.4 million shares. So still from the benchmark of the day where it gapped up, that was nice. It's trading just slightly below the low of August 16th. That is 27.63. It's at 27.65. Okay, so right now it's 2 pennies above that level. Yesterday's close was at 27.64. Okay, 1 penny above that. But no bulls yet. You want to see some type of bullish formation, but take a look at this. You're down towards the bottom of the relative strength indicator out there. That's a beautiful thing. If you're going to be buying an equity, you certainly want to be buying from the lows. You want to be buying from those weak hands out here. This one pulling back on some light volume. It would be nice if this had a high volume high. It doesn't. Does not have a high volume high. So now as you take a look at this equity, now as we take a look at the left side of the chart, and the left side of the chart is the only thing that you can use to really gauge where your first areas of resistance are. Well, your first area of resistance in this thing is going to be the gap. Right? The gap that it just most recently created here in ANS. That is going to be the $30.99 level. Gap down on February 7th. I presume that might be because of earnings or something, but maybe it was something else out there. Either doesn't really matter what it was. All you need to know is that it gapped down with volume on February 7th. So you'd be taking a look at taking a position maybe right around in this area of 27.65, and you would need to know that you're going to run into some resistance up here at the $30.99 area. If you can get back inside that gap, that would really be resistance zone 1 on this trade here. Resistance zone 2 would be the low of February 6th out there, the low of $31.70. So that is on AN. This is a much better trade setup than CenturyLink. This is one that I would put on my, I would put on my charts as stocks to take a look at, especially if you were interested in Ann Taylor in the loft out there. Let's go take another request to take a look at Logmain, MEIN. Don't know if I actually pronounced that right, and if I didn't, my apologies. Ticker symbol, doesn't matter. LOGM is the ticker symbol. So let's go take a look at this equity, gapping down with volume. Looks like gap down with volume. This is the daily chart. Why don't I see today's? Let me refresh my screen here, see what we have going on. It is trading out at 17.43, down $6. Maybe it did gap down today. Well, as a matter of fact, it did. It is February 15th. Okay, so the question was taking a look at this equity, and boy, I can't. Let me put this on a weekly basis. This is pretty horrible looking, isn't it, folks? Take a look at these gaps. This thing gaps down here all the way back in July of 2012, July 27th, with 600,000 shares. Then continues its move lower with 3.2 million shares. Wait a minute here. 3.4 million shares was the gap down July 26. Excuse me. And if we take a look at, Al tells me it's Log Me In. Okay, thanks, Al. He's on the ball here. Now, as we take a look at Log Me In, LOGM, this thing here is logging out. Holy cow, this thing, we got to go ahead. This was a IPO back in 2009, already back at those levels. So let's go ahead and put the longer term. Let's see what the weekly chart of this thing looks like. So Log Me In here, looks like they are headed all the way back to the lows here, which would take it into 15, 17, and probably even further. So let's look at the A to B equals CD down on this stock chart. And then we'll go back and peek in on Goldilocks and silver and see what they are doing, because they still – so there's a message in the markets here that, for me, is a disconnect. You've got light sweet crude getting hammered. You've got gold. Truly, the hammer just fell out of gold. Silver down 45 cents out here. And our markets are like ho-hum. Folks, that's something wrong. You get copper down as well. I don't know where it's coming from. I don't know where it's going to come from, but something is not right in River City. As we take a look at log me in, though, let's take a look at A to B equals CD down here. It has completed that 1-to-1. The 1.272 says 1568 out there. But what you've got here, volume-wise, this week, over a million shares below a swing point low. Don't even go near this one. So what you would want to take a look at, of the three that we looked at so far this morning, I would say would be ANN. That is coming back into a breakout area. A quick peek in on gold out here and silver. Let's go take a look at these charts here. We've got gold just continuing, almost trading at session lows here. Volume picking up to the downside, so 135,000 contracts coming against that 143,000 hammer level out there. So gold clearly on its way to 1584, but more likely, folks, 1526 out there. Let's go out to Houston to our man Max. Max, how you doing today?
I'm doing fantastic this morning, Steve. I hope you're doing the same.
I am. You wanted to take a look at the transports, the IYT, I believe?
Yeah, and I think I'm beginning to put all this stuff together. I think it's done a 1.382 expansion.
All right. Are you looking at a daily, a weekly chart? What chart are you looking at?
I was looking at the daily, and today it gapped up.
Okay.
And it's got a kind of like, just got just a flat line like a doji or something. And I think it's done. But my question is on this expansion, it seems like that's towards the end of the expansion, so it should be out of steam.
Well, so let's take a look at it. So expansion-wise, I'm going to put this first on a weekly chart here and kind of scrunch it in a little bit. So if we take a look at different patterns that would be out here, the expansion that I would be looking at, because it's out over a swing point, and the swing point I would be looking at would be July 8th, 2011. So I would look at that swing point high. Now that was a nice doji out there. I would take a look at that swing point high all the way down to the low here that was put in back in October 7, 2011. Yeah. Now the 1.272 expansion of that actually takes you up to 109.97. Out there. Just taking a look at the longer term picture for you. Okay. If we take a look at a shorter term picture of expansions here, the swing points that you would be using from an expansion standpoint would probably, it looks to me like it's the high of the week of March 23rd, 2012, so that makes sense to me, and then down to the low that came in on June 8th. And it's past the 1.618. It's up right now trying to get to the level of a 2.0, 106.35. So far today it's straight up at 106.22. But the 2.618 level is really its next area, and that's at 112 to 112.61. So you've got 109, let's say 110 to 113 is really where the expansion is. Now let's just take a look at A to B equals CD patterns that might be setting up here on the transports. And then we'll come back and take a look at candle signals out here. So the A to B equals CD on this also, just to see some patterns that probably come together right around the same area. Max, if you take a look at it, we'll come back after the break if you can hold, but you've got a 1-to-1 A to B equals CD completes a 111.54, a 2.618 of that C to B to C swing point at 112.61, and then the larger term. So that's really where you would set up a butterfly expansion pattern on this. But we'll go back to Max when we get back from break. 877-927-6648. Be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow up 5 points, composite up 2, small caps are up about a point, and the S&P flat. Let's go back to Max in Houston. So, Max, did that help you at all going through, those expansions? Uh-oh, did we drop Max? Oh, Max dropped. I apologize. Okay, so let me just try to finish this off, because it looked to me like Max is looking for a possible short here in the transports. When we take a look at the transports, the only real bearish sign so far that we've seen here really took place on the trading session of January 30th out here. You had a couple of doji candles, hanging man type candles right up here. You had 3 of those. That was a pretty decent sign. And then you did have a nice follow through on January 30th. But that session simply what should have acted as a resistance area out here, the way I take a look at it, has given away. As well, you've also had a little gap up this morning. So you had a gap up this morning. You had a little bull sash candle. That's this one right here on December the 13th. So the answer, Max, is you don't want to short anything, at least I don't think you do, until you get the confirmation. And the confirmation is some type of signal, and some type of signal is going to be a candlestick signal. And you're going to be looking for some type of reversal. And you don't have that here in the transports. What would be a reversal signal in the transports today? Well, a big reversal signal here would be a close below yesterday's open. Yesterday's open was 105.15. If you get that, not only will you have a bearish engulfing, you will get a key reversal day as well. Why? Because you opened above yesterday's open. You're in extended condition. You will have closed in the opposite direction out there, and the intraday high would be above, high and low would be above and below yesterday's candle. So as long as this intraday would get below 105.02, and I'm not saying that's what it's going to do, but what I can tell you is what it is that you would be looking for as a reversal signal. Does it have to actually do that? Does it need to be a key reversal day? No. I was just giving you the ultimate or the optimum type of reversal signal that you would be looking for. As you know, price can go higher. And the cool thing about candlestick charting is that just simply the bulls and bears can't hide. Doesn't mean that the positions, because it's war. It's the art of war out there, and doesn't mean that one side might lose its defensible position out there, but it does give you the places where you would go ahead and take a position. Consider taking a position out there, and then if the move goes against you and closes below that area, you just simply go ahead and exit. You take a small loss as you possibly can, and wait for the next signal out there. Again, going back to gold and silver and crude oil, because those are the things that are moving here in the market, as well as platinum. But let's go back to Goldilocks and see what Goldilocks is doing. Trading now, it's still near its session lows. 1610 is where it's trading at. It's gotten down to 1608 out there. It has further to run to get back into those 1500 level, that 1526 or so. And silver doing the same thing. Let's take a look at silver and see what kind of volume that we have so far in the contract here. And stay tuned, folks, because we've got the Nadex Bull-Bear Binary Option Hour coming up next. We'll see what kind of trades Daryl has put on. We can see here silver volume picking up as well. 40,000 contracts coming into the 41,000 contracts on January 4th. What does that say? It says silver now wants to go test the low of that candle session for sure, $29.24. So coming in hot, and it has more room to run to the downside. You've got trading in the markets here. The Dow is up about 10 points right now. If we take a quick, we don't have time for a quick peek into that because we're just at the end of our show. So, folks, if you're off to start your day, have a fantastic Friday. Remember, the markets are closed on Monday, so we'll be back with you on Tuesday. Have a great weekend. And remember, folks, you've got an amazing power within yourself. That power is so strong it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, but most of all, create fantastic, loving families. Thanks so much for being a part of our TFNN family. Have a great day and a great weekend, folks.